Hello and welcome to Pro Trader Strategies Market Commentary for Friday, December the 29th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data. All we really got was German CPI. Month over month came in at 0.6%, expected to be 0.5%. Spanish flash CPI came in at 1.2%, expected to be 1.5%, so slightly lower than expected on the front number. Last month's number did get revised up by 0.1% to 1.7%. And that's about it. Not a whole lot else going on. Real quiet markets. We talked about this early on in the week. There's not a whole lot of data to go on today, or this week for that matter, and not a whole lot of volume to trade off of, to be quite honest. Anyway, we've got crude oil futures up into the 60 handle. It's the first time we've seen that in quite some time. Trading very strong in this trend channel here. So continue to see crude oil moving higher, especially with the good economic data points that we've been getting. Gold moving higher, despite the fact that we would see in a good economy usually a rollover in gold. I have on GLD long puts. It's not working out clearly because it is completely gone in the opposite direction that I expected from the get-go. I have done it really small. Keep talking to myself about getting out of it, but I have it on so small that it's I'm just going to let it ride. All right. Just another day in Bitcoin, up another 1,000 points, up 1,000, down 1,000. Who's counting? But it was looking to try and test that 15,000 handle today. That has fallen just slightly shy of that by about 30 ticks. I mean, we could see that happen in a matter of seconds anyway with Bitcoin trades. Bonds slightly up on the day. Right here at our point of control where the most volume and time has been spent, very close to where the volume has been spent. That's up here. This is the time where we are right now, and it just so happens to be lining up with that 50-day moving average. They have crossed over, which is more bearish. Actually, they just crossed over. Sorry about that. They crossed over earlier, but now the 200-day is above the 200-day is above the 50, which is bearish. So at least in the near future. It's not like being under the 9-day, which is more short term. This is actually a longer term predictive type of chart setup. When those cross 200 days over the 50-day, that is more bearish in the coming months. So that's exactly what we would expect to see with the Fed talking about raising interest rates, right? So as interest rates go up, the price of the bond goes down. We've got VIX still holding tight up there at the double digits, trading 1019 right now. We're seeing a bit of a pullback in most of the broader equity markets. We did yesterday, though, have a all-time high settlement in the Dow Jones Industrial Average. So you can see it right here. It settled at 24,837.51. So 37.51. So all-time high settlement. It's not the all-time high trade, which is what we saw back there, but it was an all-time high settlement. And then today, right off the open, nothing but to the downside, down 23 points right now. And the NASDAQ continues its slide. It's been the leader to the downside as money's been rolling out of tech and into more of the blue chips and things of that nature. We've been talking about that, seeing that for a few weeks now. And NASDAQ continuing to lead the charge to the downside, albeit it is on very light volume, and there is it's not a big move. These are just small incremental moves down, and one could even say that it's almost looking like it's going to flag and then snap to the upside maybe at the beginning of the year in January. There's a thing called January effect, and what happens is a lot of times heading in December, people sell the stocks, take their profits, make the books look really good, and then in January when they go out there and start buying back stocks to invest in for the year, that has a tendency to drive the stock market higher. That's called the January effect. So we could very well be seeing that going on in tech. We've had a great run all year long across the board in broader equities. I am sure these fund managers are itching to book profits to make their books look really good. When they go out there and sell that fund next year to people, hey, look how much we are up across the board. So that's what you see a lot of times happening right now in the late December area. Now, this is an all-time historical high in the E-mini S&Ps, but the problem with it is that it happened overnight at about probably 6:30 Eastern, so before the markets opened. And a lot of times the day session discounts what happened overnight. That's not going to really be touted as an all-time historical high. But one thing to keep in mind is the day session likes to print those numbers in the daytime. Whenever they see an all-time high, low, things of that nature, it wants to print that in the daytime. They want to show that they're the big dogs. So that is a line in the sand that we will definitely be probably revisiting. That may be one of those things that happens right at the beginning of the year in January, go up and at least take that all-time high into the day session. So we can see this on the 30-minute chart of the E-mini S&Ps. Finally snapped out of these really tight ranges we've been having. But again, like I said, that was all overnight trading. As you can see, the times here is mountain time. So, add 2 hours to that and we're getting the East Coast time. So as you can see here, this happened at about 5 o'clock my time, which is 7 o'clock Eastern, before the markets open. So 7:30 is basically when the East Coast time opens up. So right around in there. So you can see that was not printed during the day session. So that is a number that the broader markets are going to want to trade during the day session. I guess I said that enough probably at this point. All right, so a couple of things that I finally got out of was UPS. Got out of this yesterday late in the day. Just that, like I said, I had these orders working. I still have them working. Again today, same batch of stocks. With the UPS trade, though, I had on the January 125 calls in there and originally sold them for 64 cents, bought them back for 25. A little bit more than 50% of my max profit. I've talked about this a lot. In December, I have a tendency to squeeze these trades a little bit more just because the markets really have calmed down, right? I'm just going to take advantage of that theta decay. I don't really expect the markets to make these big moves heading into the end of the year. I think that that's usually where we're seeing volume kind of slack off. That allows me to be a little bit more patient with these trades because I don't expect a big move and I can capture some of that theta decay. Not really seeing a lot of volatility come out of these stocks that were experiencing a high volatility. I was expecting a little bit more volatility to come out of these heading into the end of the year, but that's just really not happening. They're really holding on to their volatility heading into the end of the year, which is not what I was expecting, like I said. All right, so PayPal, still trying to get out of PayPal. Also, it is a little bit better than 50% of my max profit on this. And in there, I have on the January 80 calls that I originally sold for, I think it was around 30 some odd cents. Let me just double check on PayPal how much I ended up collecting for that. Oh, sorry, 56 cents. And I'm trying to get out of them for like 17 cents. So it's trading around 19 right now, so a lot better than 50% of my max profit on that one. for PayPal. And then the other one that I'm trying to get out of right now is Philip Morris in both my IRA and in my margin account. I'm below the market right now, and I have on the January 90 calls in there in both my IRA and in my margin account. But in my IRA, I defined that risk by buying the 65, sorry, did I say calls? Those are puts. Sorry, I am short the Philip Morris 90 puts in there. And then in my IRA, I define that risk by buying the 65 puts. So I'm not going to get out of the 65 puts in my IRA. I'm just going to let those ride out. They're only worth a couple pennies. I might as well just leave that on in case there's some kind of black swan event or whatever. I mean, there's no sense in getting out for the commissions that I'd have to pay for getting out of that trade. So I'll just leave those on the 65 puts that I'm long, but trying to get out of the 90 puts that I'm short in both my IRA and in my margin account. But like I said, I'm below the market right now. It's trading right around, it's 8 bid at 11, and I'm working a 7 bid, so it's 7-cent bid, so I'm below the market. All right. That's it. That's all I've got for you guys today, other than later on this afternoon, we're going to be finishing up our beginner course on options, and we're going to be doing it with protective puts. And there's a certain time and place to put on these protective puts, you guys. And I'm going to try and show you when and where to implement this type of strategy in the webinar today. It's going to be a really good one. Then we're going to be moving on to our beginner intermediate. I broke this intermediate course into 2 parts. Because I'm going to start out with the ones that are a little bit more difficult and kind of work our way up to the more difficult ones throughout. So there's going to be about 20 different webinars in just this intermediate course. So it's going to go from beginner intermediate to advanced, and then later on down the road we're going to be doing the advanced strategies all over. So it's really an important time if you're a newer trader, a newer options trader, trying to learn about this. This would be a great course setup to where it'll basically take you throughout all of the different option strategies with my rules, and you'll be on your road to success. You won't have to make the mistakes that I did trying to learn this all on my own, right? So go to protraderstrategies.com. Really important to get in there early, especially with these webinars. They've been filling up quite nicely. So check it out at protraderstrategies.com. And if you can't take that, take it easy.